Hey y'all, welcome to BGTU YouTube. So today we are talking about candlestick secrets exposed, and let's get right into it. So the disclaimer, basically, these are my ideas and what I see in the charts and things that I look at. I am not suggesting you buy, sell, or do anything with me, and you can find this disclaimer all over my website. Candlesticks, this is what we're going to talk about. What's a candlestick? Anatomy of a candlestick, bullish and bearish candlesticks, candlestick patterns, charting secrets, 3 tips for new traders, and then we go into the charts. So what's a candlestick? It basically provides a visual representation of price movements in the financial market. So this is what they are. This is a monthly candlestick. So this shows you for the month, whatever month this is. We had a lot of bullish momentum in that month that continued into subsequent months. And the anatomy, you need to understand the high, low, open, and close. Now, the old candlesticks or traditional ones were black and white. And actually, those can be very helpful because what they do when you add the color to it, which means you're going to have to really pay attention to yourself. So when you think of driving, green means go. And then the stop sign or the red light means stop. So these colors have underlying meanings that's been embedded in people pretty much their whole life. And so pay attention to see if you are unconsciously following the stop light, red light, green light. If you ever played that game, red light, green light, be sure to see if you are unconsciously doing that, because if it is, you may want to go back to the black and white, or you can change them to any color you want. But no matter what, the high is the high, no matter if it's a bullish or bearish, the low is the low, no matter which one. When you're talking a bullish candle, it opens at the bottom and closes at the top. And on a bearish candle, it opens at the top and closes on the bottom. So you have to make sure you understand that, so you understand the movement of the candle. So these are some bearish and bullish candlesticks. And then this is from minimum bullish to maximum bullish. These candles I love because that means the bulls are large and in charge and they are pushing the price. Same thing on the other side. This means the bears are large in charge and they're pushing the price. Hammers are great. Oftentimes you may see them more wick and less body. So the hammer, the body of the candle can vary depending on, just which way the market's moving. These spinning tops, these are kind of like dojis, at least to me. It's kind of, the market is indecisive right now. They kind of agreeing on price, and we're trying to see who's going to take over, the bears or the bulls. The inverted hammer or the hanging man basically is the start of a reversal, more than likely. So it's definitely less bullish. And the dragonfly doji is definitely less bullish. So you want to understand what these candlesticks mean and how they're formed, so you can make better trading decisions based on what these candlesticks are telling you. They are talking to you every single day on every single time frame. It's your job to learn to speak their language so that you can make better trading decisions. So here's candlestick patterns. There's tons of candlestick patterns. There's so many, I don't even know how many there are. But these are some of the basics that most people use. And if you're a new trader, the 2 candlestick patterns, I would say, is a really good place to start. The single or the 2 candles. The single is the hammer, the inverted hammer, the dragonfly doji, and the bullish spinning top. Why? Because you're looking for those that either support or resistance. We'll get into that in another video, and they're pretty easy to spot. So if you're looking for a trade and you're new to trading, I would definitely stick with those, or the 2 candle patterns. My favorite is the engulfing, and it means the body of this candle totally engulfs the body of the candle before, and you're looking for that once again near support or resistance. The bullish harimi is actually the opposite of the bullish engulfing. You have the smaller candle inside the body of the bigger candle. And you have piercing line. I don't really trade this one, but tweezer bottoms is another one that I love to trade, especially on SPY. So check out SPY. It's famous for making tweezer bottoms, and for the most part, they always follow through. So there's a little gem and a tip for you. So 3 charting secrets. Number 1, your eye is your best technical indicator. You need to look to the left, to the left, to the left. That's going to give you your support and resistance. It's going to tell you what's happened in the past. A lot of times the past repeats itself. So it doesn't mean it's going to look exactly in the future the way it did in the past, but it's giving you clues to what you may see in the future. Number 2, extensive time frame analysis. The second most common charting mistake, or secrets, I should say, tend to be people don't look at the higher time frames. You may look at the daily, the 4-hour, the 1-hour, but you don't look at the monthly and the weekly. Those are telling you the bigger story. And at the end of the day, you want to follow the bigger story and not the story on the 15-minute chart. And the next one, these should say secrets, they say mistakes. I was trying to get this done so I can get y'all this information. Volume analysis is useless 90% of the time. And I know you're probably like, really? Now, I do use volume, and you'll hear me talk about later that volume is the fuel for your rocket, and the candlestick being the rocket. I still do believe that. But why is it useless? Is because there's so much hidden volume that doesn't show up in those candlesticks that you can't like use them as this is the absolute volume. There's a lot of volume that happens on dark pool and whole other exchanges that are not in those candlesticks. So I use them as a guide, but not as like the absolute truth. If a candle is moving, and you get one of those marble candles that are just a full body candle, very little wick, you should see some volume along with that. So from that perspective, yes, but I do not rely on volume 100% of the time, because unlike in years past, and I mean like in the 80s and early 90s, before they had all these secondary places that people could do all this secret stuff, the volume was the volume. Now, some of that volume is missing. So it's still useful, but it's not consistent enough to be used like on a regular basis, at least not the little volume at the bottom. And we'll talk about which one that is. So charting tips I have here is keep it simple. If your chart looks like this, that's way too much going on. You got to clean that up. Why is this a problem? Because when you add so many indicators, you have to make decisions on all those things on your chart. And if you're on a 3-minute chart, that's a whole lot to figure out and make a split decision. So you've got to clean up your charts and get them nice and clean. The next tip is pay attention to the overall trend. We talked about looking at the weekly and the monthly. Look at those trends on those higher time frames. For the most part, those are the ones that prevail. So I don't want to go from a monthly to a 5-minute chart, though, because the trend is probably completely different on a 5-minute chart than it is on a monthly chart. But you want to know the overall trend, and you want to trade with the trend. So just in our chart, our trend is up. So I'm going to be trading calls, or I'm going to be going long. The next one, and we talked about this a minute ago, use multiple time frames. It's important to look at charts from multiple time frames to get a more complete picture. So right here, I have the daily and the 1 hour. As we can see, this is a little tight compression and it's kind of opening up. And so I have a little arrow here for this candle, and that's on the daily, but over here, there's actually 6 candles that make up that one daily candle. So this is going to give me more detail. I can get in on the lower time frame because I can really time my entry, versus on the daily time frame, I'm getting this one big candle for 6 hours, but on the hourly, I'm getting 6 1-hour candles. So it's giving me more information to make better decisions. And then now we're about to go to the charts. So let's get to the charts. And all right, so we have our chart that we just saw in our presentation, and we are talking about these candlesticks here. So once again, for these red candles, it opens at the top and closes at the bottom. I don't care which candle it is or how small it is or how little the body. Any red candle opens here, close here. And the green candles open here and close there. I don't care the size of the candle. That's how it works. Now, another tip I'm going to give you, because this is Candlestick Secrets Exposed, these wicks mean a whole lot. You cannot discount the wicks. Usually the wicks mean some type of rejection. So when I look at this candle right here, and it's got this long, long wick, that tells me that at one point in time, this candle, this whole entire candle was green, which meant the bulls were large and in charge and they was doing their thing. And the bulls was like, oh no, wait a minute, we holding this line right here. So the bulls came in and pushed the candle from being green to the point it was red. So this is a very bearish candle. Now, we did have some more green the next day and then it fell, but you can really see this if you drop down to lower time frames and look at those lower time frames. So you want to pay attention to your wicks. Your wicks are usually some type of rejection. It hit resistance, it hit a supply or demand zone, and all those things we'll talk about later. But you have to understand your candlesticks and what they're telling you in order for you to get better at trading. So that was one thing I wanted to point out. I just wanted to see what else was there. We talked about the trend. So here's the trend. It's actually up. This is the daily chart. Over here, our trend is actually down. So you want to trade, if you were here, you want to trade down with the trend. If you're over here, you want to trade up with the trend. Once again, right here, we have one of those bullish engulfing candles. This candle totally engulfs the body of that one. So right about here, this is probably some support here. I mean, I could just take this and draw a line and make support. Probably should make that a little darker. So that was probably support. And when we look, we're going to look to the left and see what happened previously. Now, mind you, this is the daily chart. Look at that. It was support way back here in March 20th in 2020, but it was also support here, which is July 22nd, July 2022, September 2022, and then September again 2022. And that's why they say your eyes are your best indicators, because if you take the time to look left, you can see if that line that you drew was a valid support and or resistance prior, because prior support becomes resistance and vice versa. So there's a nice bullish engulfing. If you were looking for a trade, you could drop to a lower time frame to look for a good entry, and then you would have had a move from 65.41, where you want to get out, up to 89.27. Now, I'm saying that, but in reality, most people are not going to hold from here to here. They're just simply not, and that's okay. But potentially, you could have made that move. And then here's the other one, pretty much back at support. Now, I know these candles have broken that line, and that's our line of support. And I want to make sure I tell you that this line of support is more or less a zone, not necessarily this individual line. So if you struggle with trying to understand that this is a zone and not necessarily this little bitty line here, I've been doing the line for so long, like I get it. But you can also draw a box around it to indicate your support or resistance zone. So you're looking for a bounce in or out of this zone, which you can see it happened here. Then we broke it, then the zone. So here it was support and it came back up. Now that support became resistance in the future. And I can just drag this across and see what happens. And it kind of wicked out, but we did get some downward movement from that zone. And then it actually just jumped over the zone. So we'll have to see what happens when it comes back to the zone in the future. So remember, support and resistance is more of a zone versus this singular line I drew. So if you're struggling with that, use the rectangle box versus using the line. So hopefully that got you some secrets exposed on these candlesticks and how to read them and some things to look for. Be sure to subscribe and come on back, because I got a whole lot more to share with you so I can help you get to the bag on your trading journey.